Hey guys, Sean here. Today, we're going to discuss YETI stock in this 4-part video. In this first section, I'll give you a brief summary of YETI's origin story, then we'll take a look at their financials from their Q2 earnings that were released just this month. Next, we'll jump into their competitive advantages and why I think they're poised for long-term growth. Finally, I'll end the video with my holdings and my investing strategy for YETI. So YETI was founded in Texas in 2006 by brothers Ryan and Roy Siders. They grew up hunting and fishing and developed a deep love for outdoor adventure. Roy ended up in the boating business and actually, he tells his story much better than me, so let's hear him explain it.
It was really the boat business that brought me to the cooler business. Everything about the boats I was putting together was high-end and durable and for fishing the Texas Gulf Coast the way we like to fish, except ordinary coolers. They weren't really matching the quality of the rest of the boat.
Their mission? To build a cooler they actually wanted to use, one that was built for serious outdoor enthusiasts rather than for mass discount retailers. The brothers decided early on that product innovation would come from real, first-hand experience, not from market research, not from data analysis. They never sacrificed quality for a few extra bucks. YETI's first advantage is their commitment and execution of superior product performance. No matter where you shop for their products, whether it be on their own site, Amazon, Dick's Sporting Goods, Lowe's, they're always accompanied by thousands of satisfied customers who consistently rank them 4 to 5-star reviews. 95% of YETI owners proactively recommend their YETI products to friends or family through word of mouth or social media. Now, this is the best form of advertising since future customers are hearing this from someone they know and trust, and this deepens the community that's built around YETI products. Just this June, Condé Nast ranked 3 YETI coolers on its list of 12 coolers you can take anywhere. And magnifying YETI's own Father's Day efforts, Gear Patrol recommended the Hopper M30 soft cooler as one of its 20 best Father's Day gifts. Fast Company selected the YETI 5 series as one of the 7 most well-designed Father's Day gifts of 2020. And YETI's new Trailhead camp chair was just named the best heavy-duty chair by Forbes magazine. Now, this is something that YETI does that's very unique, and its competitors simply just don't have the access to do. During the final stages of product development, YETI sends their samples to their network of brand ambassadors. These ambassadors are composed of world-class anglers, hunters, barbecue pitmasters, surfers, and photographers who embody the YETI brand. The logic here is that if their samples don't get in the way, but actually enable these top-performing outdoor adventurers to do what they do best, it'll be good enough for the large majority of their customers. This relentless commitment to product excellence is what separates YETI products from the competition. In this section, we'll be discussing YETI's aspirational nature of the brand, which is their second competitive advantage. You've got to be specific about your target market, understand them deeply, and know what makes them tick. Ryan and Roy Siders did exactly this during their humble beginnings. They honed in on what they call their heritage market. It's a very specific group of rugged hunters and anglers in the south and southeastern parts of the United States. This engagement between ambassadors and their fans reinforces the authenticity and aspirational nature of YETI and its products across existing and future customers. Why else would YETI owners purchase and proudly wear YETI apparel and display YETI banners and decals? The reason is because customers feel an emotional connection to the brand and its product. This emotional connection becomes increasingly important as YETI broadens its appeal beyond their heritage market. From 2015 to 2018, their customer base has evolved from just 9% female to now 34%, and from 69% hunters to 38%. Judging by the wave of new digital content they're pushing out on their YouTube channel, Instagram page, and podcast series, it's likely that the marketing budget has increased greatly. This is awesome news to investors, as it implies they're seeing success in emerging markets as they evolve from their heritage market. The YETI brand is inching closer and closer to becoming a rugged status symbol. They've got influential people like Joe Rogan advocating for their products even without compensation. Here's a quick clip from his podcast.
YETI makes super high-end coolers.
Okay.
They're like really expensive, but they literally will keep ice for days.
Ooh.
You could put ice in them and go to the desert, and 5 days later you have ice in that cooler.
In this third section, we'll go over the financials based off of YETI's Q2 earnings reported on August 2nd. Here's a PowerPoint that YETI released for their Q2 earnings. We can see that net sales increased 7% year over year, $247 million, beating expectations by $54 million. Coolers and equipment rose sharply to 18% year over year, while drinkware fell 2% and wholesale fell a whopping 24%. Now, that's a huge number. So after reading the entire earnings call transcript, I learned that drinkware fell due to a big drop-off in corporate sale orders. So that's understandable and not a big area of concern. Wholesale orders fell sharply due to the massive store closures their wholesale partners faced during the quarter, so this is also understandable. Next, we see that direct-to-consumer sales skyrocketed 61% thanks to the stay-at-home orders where many consumers turned to online shopping. It's great to see their direct-to-consumer channels firing on all cylinders to take full advantage of this shift. This slide illustrates everything we've talked about so far. Gross profit increased 18% to $138 million, or 56% of net sales, compared to $116 million, or 50% of net sales during the same period last year. For those of you who have stuck around this far, you're probably very interested in the stock. So I want to mention this because you'll probably come across this in your due diligence, and I want to help save you some time. You'll see a big drop in sales in 2017, 22% to be exact. In my research, I came across this article by SGB Media, and it details exactly what happened. It's a long article, so here's the summary. Driven by strong customer demand and a shortage of product in 2015, retailers wound up aggressively stocking up on YETI products during 2016. But the aggressive buys led to excess inventory in the wholesale channel and drove many of the company's retail partners to reduce their purchases in the first half of 2017. In addition, they had issues with one of their biggest partners, most likely Walmart, who launched their own private label brand of competing products. Finally, YETI said that the company settled several lawsuits it had initiated against competitors over copyright allegations. While the settlements were favorable to YETI over the long term, during the first half of 2017, they resulted in competitors being allowed to liquidate the disputed inventory at low prices. So this essentially flooded the market with super cheap knockoffs of YETI products, which obviously hurt their sales. As a result, revenues in 2017 dropped 22%, wholesale revenues tumbled 40%, and net income dropped to $15 million from $49 million. In response, YETI took several steps to basically reset the company's business model. These actions helped reduce retailer and its own inventory levels to target levels, enhanced liquidity, and reinvigorated growth by year-end 2017. Link to the article is in the description in case you guys want to dive deeper. Alright, you guys made it to the last section where I'll share my holdings. As you can see, YETI is a very small portion of my portfolio. The reason is because the stock has seen a massive price increase as the markets have reacted extremely favorable to the company's growth. The price is currently at $53.95, which is flirting with its all-time high of $55. And the PE ratio currently trades at a lofty 68. For these reasons, I'm buying shares slowly to dollar cost average my holdings in the event of a pullback. But if there's not a pullback and the stock price keeps rising, this method still works out for me as I'm still building my position. I'm so pumped on this company. I hope you guys are too. It looks like they just released a teaser for 7 new documentaries to be released live on YouTube. Let me know in the comments if you guys will be watching, what you guys think about YETI products, the brand, the stock, the video, anything at all. In any case, I'm going to keep adding shares. I'll share my position with you guys with a follow-up video. If you don't want to miss it, be sure to subscribe. And if you enjoyed the video, help me out with a thumbs up, and I'll catch you guys in the next one.